morning. It's Chris from Axel as well as Solstice. You can find us on both websites for retail as well as institution. We're not a broker dealer. We're going to give you educational class today, small, about the following week, what the outcome can be in the stock market. Remember, use at your own risk. And you can find us as well on Discord. The YouTube channel is the weekly video for free for everyone. Let's go to the first slide that I have up here. What I did, I put basically, are the insiders selling the market or buying in the market? We have to break it down from the micro to fundamentals to technicals. Most people come in but they buy stocks in a sector without understanding the indexes. What are the indexes doing? Because the index is part of those sectors that are in the stock market. So you have to go to the indexes such as the S&P, the NASDAQ, the Russell. The Dow represent 30, consumer products, staples, technology, and so on. So you break it down from the index to the sector. Then you pick the stocks in that sector that are moving in the right direction when there's rotation between, technology, consumer products, staples, and so on, or discretionary, dividend, mid-cap, and so on. So we take a look at the S&P, we'll look at the NASDAQ, we'll look at the Russell in relationship to the dollar, the bond market, and the VIX, which is the fear and greed gauge, Bitcoin in the crypto sectors, NYU, the New York Composite, and IGV, the overall between the New York Composite and the global markets. What has the market have done? You're going to trade the charts in front of you. This is rule one. Protect capital at all cost. It doesn't mean you allocate capital. If things are going in the wrong direction, you wrong and you put that equity, that stock, that commodity, whatever. Make sure you have a maximum pain that you can tolerate, a 5%, a 3%, a 10% loss in your portfolio. So you understand protecting the capital. Do not stay wrong because you will be solvent. You'll lose your principal. You'll end up losing 50% of your account, 60% of it. You'll get a margin call if you are on a margin. Then you'll end up blowing up the account. Don't do that to yourself. You'll end up having fear, and that fear and greed gauge will tell you, hey, don't do this. Learn technicals before you put money on the line. Act on every action and reaction. What do I mean by it? You have a setup on the chart. You look at the weekly chart, the monthly chart, then you come to the daily, then the 4-hour chart. And you have a level that you think that the equity, the commodity, the crypto, the Bitcoin finds a level, and you're going to buy it on a setup. Don't question the move. By the time you question the move, you're going to miss the opportunity, whether it's a buy or sell. Don't be biased that the stock is going to go or get married to an individual stock or an option because you are biased thinking that it's going to go in your direction because you are in it. Don't turn a winner into a loser. What do I mean? You have a winning gain in XYZ stock. You end up buying it and it makes money for you. You get greedy. You don't take a portion of your portfolio gain into that move, and you can keep a small winner running. But if you end up turning it from being $1,000, $2,000, $5,000 gain, and you end up losing $2,000, that's a loser. You ended up turning it. Don't do that to your portfolio. Money will start flowing once you listen to the setups on the chart. So remember, micro, fundamental, technicals. Technical, does it tell us something good or bad going to happen in the market, or is it going to be garbage? Whenever you enter a position, you have to use the technical setup, whether you're using a momentum indicator, a moving average, a Fibonacci, and so on. These levels will tell you a story on the chart to find a level in order to act on it, if it's going to be a good trade or a bad trade and end up to be rubbish. I use the word rubbish like an Aussie. Here they use garbage. So is it good or bad? That's the only thing. We're going to use this for illustration use, and I hope this video will help you. And remember to check us out at solstice.axalatrai. atrai.com. If you need to get in contact with us, let us know. Give us your commentary and let us know how we can assist you in your trading goals. This is the website for Axel. This is the website for Solstice. You can find us right there. Let's go to the first chart that I have up here, and I put the micro S&P 500. I used the 9-month chart, not more. You can see it here. It says 9-month daily chart. I wanted to show the consolidation, the breakup, consolidate, breakup. Then from here, from the September area, we had the JPAL, interest rate come back, retest, rally up, got a gap, fell back in that range, tested this area, rallied up. We were in consolidation in this area, weren't able to take this high out. Eventually, we grinded. We created a head and shoulder. You can see it here. Then we fell down. We are in an open cone. Is this a relief or change in trend? The volume on Friday was 1.114 of a million shares. On Thursday, the volume was 1.4 as well. So there's not much change in the volume in the S&P, but you can see that we were downtrending. Then we rallied back up, found some kind of support in this area. You can see this was the breakup. Higher, lower, we fell in. And if I put my mouse right here, we've tested this area, this consolidation, this was the breakout. Retest this area, held, and broke back up. Is this a relief in the S&P 500? Possibly. Or is there sector rotations in the S&P where most people are trying to buy the tech sector and not looking at consumer products and so on? So if you can look at it, we are in an open cone. So what I'm going to do, go get a trend line, connect the pivot point. These are called signal or pivot point. Most people call them support and resistance. I call them, signal alerts. I connect this to here. You are in an open cone, but you came back to retest this area. You see it? You tested this area. You closed right above it, but this is in consolidation. Does this continue to go higher, or do we get rejection and fall back in? So we got to pay attention to the S&P, what it's doing in relationship to the other sectors in that S&P. So let's go to the micro NQ, which is the NASDAQ, and I'll do the QQQ so everyone can kind of get a better view of it. You can see that nice consolidation, rally, consolidate, breakout, retest that area. You can see it. This was the JPAL. Came back, retested it here. We started in the NASDAQ kind of in the range bound here, chop fest. We broke above it. We fell back down in the range, found some kind of support, but you are in an open cone. It doesn't matter where you look at it, how you look at it, or downtrend channel from here to this high. We were in an uptrend. We lost that uptrend. If I connect this dot to here, we were in an uptrend. We lost it. Couldn't make it back to that uptrend. And if I connect this down here, we are in an open cone, have not been able to take this consolidate. This is a very important area, which I'm going to mark here. We're going to go get a price line. Okay, everyone, I'm going to go get a price line, connect it from here and just put it up. So you can see that area here that I'm going to call this a price line. I'm going to change that to a little different color because I use these as pivot. The point of control, I use them as purple, royal blue for the monthly. The value high, I use red, and the value low, I use green. You can see them on my chart. This was the monthly volume profile. But what I'm going to do is make this into yellow, but I'm going to make this solid. We're going to make it a little bit larger. We're going to make it 5 so everyone can see where that level is on the NASDAQ. I can get rid of this line up here. Even if I come back to it and I retest it and fail, that is okay. If there's going to be continuation breakout, go into value low, that is great. We're back inside that chop fest range in the NASDAQ 100. So we can look at it and say, okay, we are in a down sharp trend. We can grab this to here. Oops, I got the price line, sorry. We got to go get the channel again. I'm going to disconnect the other lines that I did, so we're going to remove them. We're only going to keep just the open cone. I'm going to get rid. You can see this one. You can see we are in that downtrend channel. I'm not going to use that anymore. Remove it. We're going to show that we are in an open cone, and I do have a sharper level here to here. We're trying to break out. You can see if I touched it, it's a little bit trying to break out, but I'm not going to put it on the chart. So we are in an open cone, and even if I do this from this point to this, we are in that downtrend channel, or even if I activate it and move it to the sharper one, you can see we are still in that downtrend channel in an open cone. So more importantly is understanding the risk. Was this a relief for continuation or not? The NASDAQ still has to clear this area in order for the sentiment to change, because if I take the high and low from here to here and I do a measuring tool or Fibonacci, I just want everyone to see it so nobody says, oh, why did he do this? We are below the 50. The 61.8 is very important. Do we end up coming here and rejecting coming in value or rejecting the value low? So this is how you get the Fibonacci set up on the charts, on the monthly, the weekly, the daily chart, in order to understand the risk if we are in an uptrend or downtrend. And this is why I use the micro NQ to show you these levels so we are not biased. Let's take a look at New York Composite NYA. And I wanted to show the New York Composite in relationship to the overall market. You can see there was consolidation here, the grind up, the rally, and even the New York, because there are sector rotations. You see that we were consolidating for almost 3 weeks in this area, and eventually we broke up. So is there things changing and people moving money, shifting from tech, semiconductor to other instruments? We have to pay attention to it. But I want to show you the IGV, which is very important. This reminds me of the 2001 when the tech bubble and the Twin Towers got hit. I have not seen this kind of volume on this sector since those days, and you can see that the volume was very large. 45 million were on the way down, selling into that push down. Or are they restructuring, resetting their portfolios or rebalancing, getting out of the shorts if they did and coming back into the market? And you can see IGV on Friday, from that 45 million, we had a 38 million reversal back up in volume. Is this mean that there's going to be continuation or just a relief to come to the point, to the pivot point? You can see that 87 to that 90 area and reject again. We got to see what the charts offer us in relationship to what the markets are doing. So let's take a look at the bond sector, and I'm going to show the ZF, which is the 5-year bonds. I can use the 10. We can see that we tried to rally. We fell back in a little bit. We have to pay to the interest rate on the chart. You can use TNX and CIG, and it'll give you. Oh, did I do it right? TN. Huh. It doesn't want to load up. Well, sometimes they do, sometimes they don't. If we have recent, where is it? I did it earlier. Let's see. There it is. We can see that we tried to rally. We had a double top, fell back in. If there's going to be continuation in the 10-year notes, and we see that we're going to drop back to the 50 or this was a big reference point at the 50 Fibonacci. I kept it on the chart, and I hope this will help to give us an overall view, because if I go from the daily to the weekly, we're going to set it up together. We're going to do the weekly so everyone can see it. You can see that I took the range of the prior 2023 to the high and I set it up. But last year, the range was more narrow. So if I don't want to use this measured move, so what I can do is activate it. So we're going to move this to the right, and I'm going to use a measured move to the left. So I'm going to grab this here. Let's just zoom in this way. We'll fix it. Grab the bottom of the Fib to the high for the year. This is the annual Fibonacci, so we know where we are. And I'm going to go get a measuring tool to get the extensions from top to bottom for those 2 years. So that way I can change these colors to be cyan or gray, which I'm going to make them into cyan. Oops. Select, you can see the extensions -1 plus 2. That means 100 to 200%. We're going to make them gray and push OK. So we have the levels on the charts for the prior 3 years. Are we in range or not? We can see where the 50% is. We are holding above it. The 61, we can draw the fib either way, top to bottom or bottom to top. It doesn't matter. Or I can just rotate it, activate it. Watch this, activate. I can rotate this to the top, bring this down to the bottom. So if anyone wants to use the 61.8 to the top as resistance, you can see where it is, the 50, where institution look at it to be high or low. So that's on the bond. I know I stayed too long on it, but let's take a look at now Bitcoin, micro BT. And this is very important. I'm going to show this on the micro Bitcoin to show you that this level on the annual chart, when we went up and came back down, you can see we tested the 23 or the 27.2%. If I edit the property here, that minus 23%, you can see my extension, the minus 23. Even if I switch it or I remove the 2.27 extension at the top and I make it minus 0.272, and I make this into a different color. Let's just do this so we know where our levels are. Let's do this in a light green, and that should be fine. Okay, we do this. You can see we tested that area correctly to that point, and we got a relief on the weekly chart. Does this mean this consolidated because I had these levels? You can see I marked them on my chart, and I said pay attention to the 75,000. If we end up losing it, we're going to go to this consolidation in the mid-range, and we called a reversal on Friday on Bitcoin. It happened in the overnight rally, the Eurozone and the Asian market, and they got to push back up. But this is the weekly chart. So what I'm going to do is show you on the daily chart how it looks like. We can see that big move down underneath, then come back up. So what we can do in the style setting, I'm going to show you here how to use the moving averages. Come on, load up. It's acting up a little bit. I hope they don't have any technical issue on the setup. We're going to use the clean moving averages. The moving averages that I use the 18, the 50, the 116 simple moving average, and the 200, which is the Y. We can see on the daily chart, we are below the 18 and the 50 crossed, which is bearish cross. You can see it here when it did it. We consolidated here for a while, and I said, hey, watch out. This looks like a head and shoulder on the chart. And if we end up losing that 84, we got that gap rally, pushed very hard, sharp down, tried to rally, but was not able to take out this area. So that 74, 75 is very critical. So on the 4-hour chart, if I come in and I put the 4-hour 20 days, I wanted to show that we tested the 18, we stalled. Or you can use the 20. I use an 18 simple moving average. That's my 50. If there's going to be consolidation to break up and come to the 75 before the change in the contract, this may be, you can see the change in contract right here on the 2026. This was the monthly change when we fell down. Does this continue up towards the 50, 116, get rejection, or do we find consolidation in this area, coming back here, finding resistance and falling back in? So I am paying attention to that 27% fib. You can see where I did, and the 23 and the 14.6. This has to act as support, the 65, in order to hold Bitcoin. If it doesn't, trade what the charts offer you. So let's go back now to the daily time frame. We're going to go daily 9-month. And what I want to do is finish up showing you how to do the measured moves on the NASDAQ and the S&P. I will show you the different sectors. Might as well do this. This is the combined Magnificent 7. the Mag 7. A lot of people use the Mag 7, but what I wanted to do is show you that consolidation that we created the shoulder, the head, the shoulder, but here we went sideways. We fell back in that range, found some kind of support because they are rotational between Apple, Amazon, Google, Meta, Microsoft. You can see them, but I have included Netflix in there. And we found kind of the 200 SMA. We are still in that open cone. And even if I draw this as support here, do we clear this area here, stay above it in order to finish here, that run up and come back down? Because if I'm thinking, if we end up losing back down this area, we fall back in. But if we continue, we can see the 61.8 in the Magnificent 7, including Netflix. And I wanted to show this on the 4-hour chart, so no one says, oh, the 6-hour. You can see that rally up. We were running up and eventually fell down. We find support. Does this mean that we're going to continue to F3 and the F6, or do we find resistance? Because if I use a measured move from high to low, this was my last week's range, 1, 2, 3, 4, 5 days. So this is my high. Most people are going to take this high to this low like the Fib did it, but I usually use my weekly ranges for the highs and lows, and I do my extensions to the upside, 200% to the top, 200% to the downside. So I always try to find, support and resistance between the 80, 100 and vice versa between the 180 to the 200 to buy or sell these positions. And usually if my 50 or the 80% act as resistance, then it tells me the story on the chart. So I wanted to leave this on the chart for you for the following week. So let's go back here, do the measurements for the micro NQ, or you can use the QQQ. It's a similar setup. You can see what we did, and the machine did that linear regression. You can see I did it on the daily chart, and you can see this one I didn't, but it grabbed the sharper move down. So I can get rid of this. We can keep the other two open cones on the chart. Remove the drawing. So my weekly ranges from here, you can see the Fib took the highs and lows, but what I'm going to do is take the weekly high and measure it. And this is my weekly ranges for the coming week. Even if I extend them to the right side on the micro, edit the property, we're going to select the blue color. I'm going to revert them back to the January 1st so everyone can see it, and push OK. So you can see my levels where the consolidation was between the 100 and the 50. We looked above, fell back in the range, fell minus 100%. You can see 50 to 0. Could consider that this is one range. Then you came back down to this range and bounced back up. If I activate this, I'm going to show you how to activate it. If I activate it, I'm going to activate it. Sorry, I'm going to activate it. I'm going to move it to last week. I'm going to activate it, move it to last week's range. Okay, everyone, last week's range. This was Sunday, so my last week's range is here. My last week's range is up here. And you can see when we fell down, we came in to 100 and minus 100 and bounced back up. So for this week, so we're going to go back down here, move this here, and understand this is our weekly range. I'm just testing the 18. If there's going to be continuation, I'll look for the backside and clearing that price line. Remember, we did this on the charts on the daily to show you that in case I come back into value, the point of control and value high, or do I get rejection and fall back in? The Nasdaq is a little bit weaker, so you can use the QQQ to look at it in the same way, and you can draw it on the charts from Monday's high to Monday's low. So we're going to do the micro E or the SPY. We'll do the SPY on this one. You can see that the SPY is a little bit more stronger than the Nasdaq, and you can see we retrace. If I take this high from the week to this low here, we retraced more than 60%, almost to the 78.2. If I do change that 80%, I'm going to do this 80 here to be 0.786. So everyone knows, and I'm going to mark it with a little different color or make it larger. We're going to make it solid. We're going to make this 5, okay? push OK, you can see that where it didn't change the setting. Why didn't it go to 5? Okay, we didn't do it here. Oops. Here's supposed to be 5. Here's supposed to be 1. Push OK. You can see that the line, if in order for it, we tested the 78.2 fib, fell back in range. If there's going to be a cup and handle here to create the right shoulder, because this was a double bottom, in order to continue higher, or do we get a gap up on Monday, continue up, or do we fall back in the range to the 50 or the 61 to find support and bounce back up? So we're going to trade the charts. We are still in that downtrend channel. We're going to draw that downtrend channel to show you how to look at it. And you can see that the machine grabbed this area and this area. You can see that we are in that linear downtrend. We can go to the daily chart, 9-month, or do the annual chart. It doesn't matter. Whoa, that's a big fat candle. Doesn't exist. Correct it. Remove it. Remove drawing. There we go. Push close. If I zoom in here, you can see that this level was the high and low for the annual. We are in that open cone. You can see if I draw one from here to here, you are in that open cone, and from here to here, you're still having a higher high in the S&P 500, but you have an open cone on either side. If I remove this, let's remove it. You can see this one here and you can see that one here, but I wanted to kind of show you that we are still in that uptrend, but you are in that chop box until you clear this area. Stay above it, stay above this one, stay above here, and continue, because if I zoom in here, we tested this candle and fell down. This is why I marked the 78.2, or you can mark this with a price line. So if I go get a price line here, and we change the color, we measure it, I can change it to a different color, edit the property like we did yellow, make it yellow, make it 5. I'll make it 5 so everyone can see that level is very important to close above it in order to get above this consolidation to move up. And if I end up losing, if you can see this consolidation here, that lows here, which is the 50, and if I end up losing this area, let's just see where it is. Where can I connect it to? About this area here, or this one here. This one. This is the close of it. I'm going to put it somewhere in this area that looks very decent. This area here, and if I'm going to put this as my green line, edit the property, select it, make it green, make it solid, and we're going to do this 5. So I know the ranges to calculate the measured move. You can see the high and low, what the machine did, but this is my weekly range for the 5 days, 1, 2, 3, 4, 5. So if I'm going to fall in, I'm paying attention to this area, if I'm in that chop box, to trade above or below back in. So I hope this is very helpful. If you have questions, we're here to help. Once again, check us out at solstice.axalatrai, or get in contact with us at the 949-414-8484. And I hope this video was very helpful. Take care. Over and out.